Welcome, investors. So, all of us will like to make money in the market, and to make money in the market through good investments, we need high growing companies with decent balance sheet and cash flow who are available at fair valuation with a good management. I mean, everybody knows this sentence, but the quest is all about finding such companies. And there is one regular exercise which I do every quarter is going through the quarterly con calls, going through the quarterly investor presentation, with one of the key objective to find such companies which can grow at a higher rate. And if they have good balance sheet, good promoter, good cash flows, good growth opportunities, and if they're available at fair valuation, then I try to keep those companies on watch list. So I'll be talking about two such companies, and in this video I'll talk about one company, and then again I will have another video where I will talk about the second company, and both these companies are from auto sector. So please make a note, what I'm going to talk about is not about what will happen in 3 months or 6 months. I'm talking about what could happen in next 3, 4, 5 years. That is how we have to look at these companies. And it doesn't, making a video doesn't mean that we are going and we are buying this stock and doing all the things. From tracking purposes, I may have certain position in a stock, but that doesn't mean anything. Because once you start studying, that is where the actual journey starts. But then it's all about tracking, seeing if what we expected that is happening or not. So let's start with this company and what got me interested. So the name of the company is Menon Bearings. It's a company in automotive space. And it's not like I'm studying this company for first time. I have tracked this company for almost 7 years now. For the first time, I met the management of this company in 2017, and that is where this company came on radar. I really liked the management. It used to be a very, very small company. At that time, I think it was a 400 crore market cap company. And that time we had peak of the bull market going on in early 2017. I liked the management, I liked the business, but I didn't like the valuation. And then I did purchase the stock. And then the whole small cap cycle and the auto cycle both peaked in the end of 2017. And this stock also, it peaked around 120 rupees. And then from 120 rupees, this stock came to 26 rupees in COVID 2020. So again, I'm reiterating, analyzing a stock doesn't mean we go and buy it tomorrow. I waited for 2.5 years to take a position in a stock, though I like the promoter. So just remember this message. I think for the first time, I purchased this stock sometime in 2020, June or July, around 33 rupees. And then in last 2.5 years, I have been associated with this stock till it was around 90 rupees. Then I had exited. But I make a practice of following my stocks, which I have earlier studied and I have liked the management. Even if I don't have in portfolio, I'll just go and I will see every quarter what is happening there. And with the same purpose, I went through the investor presentation. I went through the con call. Now they've started with con calls and all. So I found something interesting and I thought, okay, let's share with all of you. So if we see Menon Bearing, this is a company which is there into bimetal products, aluminum die casting business, and recently they have started brakes business. Now, for the first time when I started this company, it was a purely bimetal product company, which means they used to make bearings, bushes, and washers. But 1 or 2 years after that, they got into die casting. In fact, that was the time when they were entering into die casting business. And now when I see is, these two businesses are doing very well. And now they are getting into a third business called brakes, which means the company keeps adding their product line every 4 or 5 years. We will see how the company has done historically and all. But broadly, this is what the business does. And right now, 73% is still from the first business, which was bimetal product business, and 27% revenue comes from die casting business. And 30% of the revenue comes from export market, and they're trying to grow this further. If you look at the history, so you can see this is not super great, but very decent on PAT basis. On a top line basis, they have always grown in double digit. The 5 year is bad because if you take a 2018 to 23 cycle, basically you peaked out in 18 and we had two very bad COVID years which impacted auto industry. But more or less, if we exclude this 5 year period because of the 2 year COVID impact, the company has shown a double digit top line growth and the bottom line growth has been higher than the top line growth, and the company has maintained a very decent return on equity. And this company right now, it's a 700 crore market cap company, but 2 3 years back this company was almost a 200 crore market cap company. And actually this is a journey of a company from 200 crore market cap to 700 crore market cap with these kind of numbers. Almost on a 200 crore of sales, they're doing 33 crore of PAT, which is almost kind of 15% margin kind of business. I mean, even in mid and large caps, we don't get companies which do 15% margin. So a small cap, and this is not like they've done for the first year. Even if you look year by year, like on a 1,150 crore, they have done 21, 170, 25. So they've consistently done about 12 to 15% kind of PAT margin, which is very, very healthy for a small cap company. And they have been able to maintain those margins. That is the another important thing, because usually small caps are very volatile in bad cycles. The kind, I mean, if we have studied chemical sector, all we know, for all that specialty chemical, what kind of margin fluctuations happen there. If we look at balance sheet, so if you see the expansion of the profit from almost 4 5 7 crore of profit to 33 crore of profit, if you take a mean, maybe a 6 crore to 33 crore, almost a 5x jump in profit which has happened, and almost a 3x jump in revenue which has happened. It has happened on a very, very strong balance sheet, hardly any equity dilution. I think this is when they came up with IPOs, so hardly any equity dilution. The borrowings have only reduced, it has not increased, and the fixed asset has gone thrice. So 3 times fixed asset increase led to 3 times revenue increase, led to 5 times profit increase, with a very, very strong balance sheet. And if I give you more history in terms of how the company has done, so you can see the sales performance, EPS performance is good. The cash flow performance is very, very good. If you see their EBITDA to cash flow to PAT conversion, very, very good. If you see their free cash flow conversion, so one, their EBITDA or PAT to cash flow is very healthy. And from the cash flow from operations to free cash flow is also very, very healthy. So whatever metric you choose, the company seems to be doing well. The company has a very good track record for a small cap company. In fact, it is like less than 1,000 crore. And the minimum ROE ROCE has been 16 to 19% in worst of the years. So that tells about the capability and quality and sustainability of the company numbers. Very good balance sheet. If you see the liability side, all you have is reserves, very small borrowing. On the asset side, it's well balanced. You can see how the cash flow has grown, almost 4 times growth in cash flow since March 16. And this is rolling 3-year cash flow. The free cash flow growth is also good. Very good EBITDA to cash flow conversion. I go with above 70%. They have consistently been above almost 75% and plus. You can see when I say company is very stable, you can see how the margin trajectory has been. If you look at the core EBITDA margin, when I say core EBITDA margin, I'm removing other income because I want to look at the core business. If you look at the core EBITDA margin, it has fluctuated between 18 to 22%, which is decent. And recently they have gone to 25%. So everything looks very healthy. If you see the sales growth rate, profit growth rate, everything looks very stable. It's a good, stable, compounding, increasingly doing well company. That is the kind of impression we get. If we look at the charts, this company topped. This is where the auto cycle topped in 2017 end, and the small cap cycle also topped. And I think somewhere here I had met the management. And then there was a cyclic fall, there was a market fall, all of that happened. And then the stock touched around 25, 26 rupees in COVID. And then it has gone up. But in last 1.5 years, the stock was stuck in a range, and actually recently in last 2 weeks the stock crossed this resistance level. So if you see 109 to 113 has been a key resistance level, the stock has crossed it. And all these times the stock made strong attempt with heavy volume, it couldn't cross. We need to see right now if it is a sustainable move or not. But the bigger point I want to highlight is, if you look at the TTM performance, the performance has been really good with profit growing at 33%. And if you look at the trend also, last 6 quarter, last 5 quarter, last 4 quarter, you can see the trend is good. The operating margin is improving. The year-over-year sales growth rate, if you see, last 2 quarters have not been that great because of the export suffering a bit because of all the issues going in Europe. But still, despite of that, the operating leverage has worked for them. They have been able to do very good margins, and the profitability growth rate was good. Now, what was interesting is when I was reading the conference call, and as I said, one of the objectives for me to go through these con call transcript is to find companies who can, at least who are showing intent to grow at a higher rate. See, whether it will grow at a higher rate or not, nobody knows. Many managements promise, and many managements promises may not get fulfilled. But if there is a track record, if there is a, already there is a proof available, if you have some kind of liking for the management, and at least, how do you find companies? One is, there could be managements who don't say anything and they perform, and there could be managements who can say they will do this and perform, and there could be managements who say and they don't perform. So at least when the management is saying it, you have at least some way to track it, and given you have seen it for 6-7 years, maybe you will have some extra level of confidence. So what I saw is management is guiding for a 20% growth in coming years. And there is a capex plan which is there. The capex plan will mainly fund it through the accruals, internal accruals. There is a brake business which they have launched. So there is a new revenue stream which is supposed to come through the brakes business. And they have a capex plan for both the other business of bimetal and die casting business. So combining all of that, management is telling that even though last 2 quarters were a little slow, and this is little slow when they say it's on the revenue side, though on the profitability side, they have done really well. But they felt it was little slow because of the slowdown they have outside India in the export. But they are hoping it is going to normalize now, and they will grow at 20%. And there are multiple times, when these discussions will happen, has happened, the analysts have asked them questions, how you can say with comfort. They have given answers that they track basically the RFPs, and they have certain conversion rate on RFPs. And based on that kind of conversion rate, they are very much sure that the business will grow at 20%. Now, see, we don't know if really it will grow at 20% or not. But if I have to create a watch list of, let's say, 20-30 companies, which is expected to grow at 20% plus, and let's say available at 15x less valuation, then this is how these kind of companies, and has a good track record, this is how these companies fit into that kind of watch list. And then, of course, we need to monitor, we need to decide our buy price, we need to look at the valuation. But all those discussions are here in terms of how they're giving confidence it will grow, how it will grow, how much will grow into the capex, and how much is the potential of this capex. So this is where they're telling that the potential of all this capex is finally a total revenue of 400 crores. And currently the company has done on a TTM basis 217 crores, which means basically they will be almost doubling their revenue. And when it is expected to happen, so the full capacity is expected to go by end of 2025. So that is why I told in the beginning, don't look at these presentations from 3 months, 6 months perspective. These are basically watch list companies which we need to track from 4-5 year perspective. And of course, everybody needs to track, do their exercise, find their valuation comfort, pricing comfort. But let's say they're committing to go by end of 2025 fully. And let's say the utilization becomes 100% utilized by 2026, or let's give 1.5 years. So basically we have 2000, half of 2023, 2024, 2025, 2026, and 6 months more, let's say give. So we give 1.5 years post, the whole capacity will be built. So basically we have almost 4 years for this capacity to deliver a 400 crore of revenue from 217 crore of revenue. And you can make your own assumptions that what kind of compounding growth rate will happen. If the compounding growth rate, let's say, is around 18-19%, and the company is available at X valuation, so you can do all sorts of exercise. We do a very detailed exercise in terms of Excel sheets, building the models, showing the valuation in our practitioner program. If you're interested, you can join the program. You can visit our website and we can join the program. But it gives you a fair idea of how the business is there right now, where the business can be 4 years down the line. You can give a 20% discount if either in terms of value, that instead of 400 maybe they will reach 375, or in terms of time, which I have tried to give, because how I am trying to give is maybe they will reach by 4.5 years, and then you can come up with the valuation estimate. Also, there was one more question around when we can grow and become 1,000 crore company, because still you are talking about 400 crore. And I think it was a very wise answer given by the management. Currently, there are 200 crore. So they told they don't want to talk about these kind of. I mean, if you just read the statement, I should not be talking about thousand and all these things. We don't know the future. So though it's a management which is giving guidance, it's not a management which just talks out of air. Uh, they looks like they're talking based on their visibility, based on the RFPs, conversion rate, but they don't want to talk things which are not there in control. They first want to reach about 500 crore and then they want to talk about anything bigger than that. And this is where they've spoken about. All this is from the latest Q4 con call. You can go and read where they're telling that based on the RFQs, they have 80% conversion rate, and based whatever growth rate they're talking about, they're talking on the basis of these RFPs, and all the capex is coming through internal accrual. So see, many times when there are very small cap stocks, the market doesn't realize the potential because it's a less than 1,000 crore stock. The FIIs will not purchase, the DIIs will not purchase, most of the mutual funds will not purchase. So these stocks, until they become a 4,000, 5,000 crore stocks, market cap stocks, the big parties don't take that much of interest. So basically, it is, popular big investors, those who find hidden gems, those who find good small cap companies, those who make 10, 20 baggers, they sit through these kind of stocks and they make money. So this is where it is. And for this kind of small cap company growing at a decent rate with, almost debt free balance sheet, very good cash flow, I think this stock is worth tracking, worth watching, and we need to see if they are able to achieve what they are aspiring for. One more thing, if you see, it's a domestic export business. Yeah, even in terms of product, the revenue is well distributed. 30% is tractor, 20% is HGV, and then the brakes, transmission. There is some replacement business. So it's a fairly diversified business, and many of you will talk about EV threats and all. So there may not be much of EV threat because of the nature of auto industries they are supplying to. So this was all about Menon bearings. The next company I will present in the next video, but maybe in the comment, you can try to suggest which is the company you feel is. I will give you one hint. This is also a company which is talking about similar kind of growth rate. This is also a company which has shown similar kind of historic performance. And this is also a company which is available at, in fact, the other company I'm talking, it's available at much cheaper valuation compared to Menon. So let me know in comments which company is this, and I will come up with the other company details in the next video. And again, I'm highlighting, we are talking about creating a watch list of companies which can grow at 20% with good cash flow and balance sheet, available at a decent valuation without any big froth. I won't say these are cheap valuations, but that's the intent, and take these videos from that angle. Thank you.